With the recent instability in the housing market, we've had clients asking us questions regarding mortgage products and if it's the right time for them to buy. To answer some of those questions and provide some confidence in the market, we've invited one of our independent financial advisors here to answer some of those questions for you. We're here today with Ollie from James Layton Financial Services. They're one of our very trusted and client-recommended independent financial brokers. They do a fantastic job of sourcing mortgage products and rates for the majority of our clients that purchase a new home with us. So Ollie, earlier in the year, about September time, there was quite a few changes in the market. Can you just explain to us what happened?
Well, quite a lot has happened actually over the last few months, and it's quite easy to I suppose be all doom and gloom, but actually there's quite a lot of positivity to talk about. Now, so ultimately what happened, there was a huge amount of political instability, if you remember, and we changed prime ministers 2 or 3 times, changed chancellors of the exchequer 2 or 3 times. And as it happens, banks don't actually borrow money to lend to us from the Bank of England. They borrow that money internationally through what they call the swap markets. And ultimately what happened is that these banks, these institutions that lend money around, they lost confidence in the UK economy, and that caused a lot of uncertainty and basically made the cost of the money, mortgages that are lent out, to go up very, very quickly. And that was also exacerbated by the fact that the US dollar had got a lot stronger versus the pound, and so there was a huge exchange rate problem which made the rates even more expensive. And the pace at which that happened was very difficult for lenders in this country to keep up with. And so what they did is they withdrew a lot of products off the market in order to reprice them. And in the press it came across as, right, that's it, no more mortgages, you're never going to be able to get one again. But in fact it was just the lenders withdrawing products so that they could reprice. Now some lenders were able to do that very quickly, other lenders need to withdraw for a period of weeks and then came back onto the market. So the good news is that those swap rates that determine our mortgage rates on the ground, they have now calmed down. We've got a good amount of stability now. And I think the best way to see it is more of a normalization of mortgage rates right now. You think over the last decade, we've experienced ridiculously low rates. It's actually abnormal, the rates that we've had, sub 2% mortgage rates. And we've got used to that because it's taken 10 years following the financial crisis. And so where we're at now is that rates are now normalised. I think they're back to broadly 2008 levels. And I think this is really the new norm. The good news is that product rates now are perfectly decent.
So in today's market, how are things looking now?
So with regards product rates right now, I suppose the first thing I ought to say is that here we are in December 2022, nobody has a crystal ball, and it's almost certain that the situation will change. But as we stand right now, mortgage rates are starting at around about 4.7% for a fixed rate and rising up to around 5.7% depending on the size of the deposit that you're intending on putting down. Which I think you'll find that those product rates may come down very slightly over the next few months. But again, nobody has a crystal ball, could go the other way. But I think realistically, we've seen a decent period of stability now in the swap rate markets. And I think we'll see very slight reduction. Irrespective of what happens with the Bank of England base rate. I think the swap markets have kind of priced in a little bit more of a rise within the Bank of England base rate, so it shouldn't have too much of an impact on product rates, if you like.
With the complexity of the mortgage market at the moment, with the many rates and products that are available, how would you recommend that a customer proceeds and sources the best product for them?
Well, it's there's no one size fits all is probably the first rule, really, is that everybody is so different. And in fact, it's two of the features of the market right now is that all customers are so different. Nothing is straightforward. And following COVID and everybody changing job, reassessing their lives, that a lot of people's circumstances have become very, very complicated from a lending perspective. And there's two real key features of the market right now: is the complexity of customer circumstances, and the second feature is the fact that affordability is hard to find. So the generosity of lenders has come down, and so being able to find affordability for customers given their complex circumstances is where having a really good broker makes a difference. And so there are a wide range of product choices. It's complex from a product option perspective, and so having a really good quality broker that will work hard for you to find affordability for you given your particular circumstances will in itself give you maximum product choice and reduce the rate that you can find essentially. So yes, there are a wide range of products available, which is great. Whether you've got a low deposit, whether you have adverse credit, there are even mortgage products available for people that perhaps don't have the income. Perhaps they could bring in a family member to help bring their income up to get into the house that they want. So right now, my sort of biggest and best advice is find yourself a really good motivated broker, and brokers recommended by builders like ourselves are heavily motivated to do an absolutely brilliant job for your customers.
In your opinion, is now the right time to be buying a new home?
Well, that's a really good question, and I guess it depends on your perspective. To be quite honest, is question what you're worried about. If you're worried about house prices going down or interest rates coming down, well, my answer to that is realistically, house prices have probably already experienced a drop in the last few weeks because of the turmoil in the market. They are expected to come down slightly over the next 12 months. Most economics commentators think that house prices will come down a bit and then will start to recover probably in 2024. So if you're a first-time buyer, for example, you're buying a house now, and unless you plan on buying your house and selling it within 12 months, then it's really not going to be a concern. And we're not on a sort of property show where you're investing and flipping a property. Realistically, we're buying homes to live in, and we plan on living in them for a few years. Benefits, I suppose, of this country from a property perspective is we live in a tiny little country with far too many people in it, and where the working population grows by 29,000 a month, and we're just never going to be able to build enough houses to keep up with that. So demand for housing is growing massively. So I think you can be confident long term that buying a house, no matter what market is right now, is a good time to buy. From an interest rate perspective, I think there's concern that interest rates are really high right now and that they're suddenly going to go down, and that you might be better waiting until you get a better interest rate. I think that's not sensible. And the reality of it is that although interest rates are expected to come down very slightly, for one, you can pick your product now and you can change that product between now and completion anyway. We don't charge a fee for that. It's completely free to do that. So if interest rates do come down, you can benefit from that. But there's no guarantee that rates will come down. So the advantage of securing your product now is very sensible. There's also a possibility that affordability may come down slightly over the next few months. So by virtue of that, you could end up with less mortgage choice, and therefore actually it could work the other way and your product rates could get more expensive. So, and then the other way to look at it is this. If what are your alternatives? So if you're renting right now, realistically, you can't be sure that your rent is not going to change over the next 12 months anyway. And rent ultimately is all interest. You're effectively paying every single penny of what you pay in rent is going to someone else's mortgage for all intents and purposes. So, if your interest rate is 6%, it's still really loads cheaper than paying rent. So that's one way to look at it. And the other thing is, of course, if you're, whatever market you're buying in, and if you ever sell your property, you're going to be selling it in whatever market that is too. So, if you sell at a lower price, you can be buying your onward property at a lower price. So it's all relative. There's, in my view, my opinion is that buying the market you're in and selling the market you're going to sell in. So I wouldn't worry too much. And if anything, delaying your purchase for those kind of reasons, I think you might find it actually costs you a lot more than saving on the interest rate, for example.
It's clear that our clients need to have a really good, trusted broker that's going to work hard for them to provide the best service possible. Please can you just talk them through the service they can expect from James Layton and any of fees that may be associated with that?
So James Layton Financial Services is a completely free service. Okay, now what that means is that we get paid by the lender on completion. Most brokers will charge a fee and get paid by the lender. We don't. We're committed to a completely free service. Now that's great for your customers because it means that we're motivated to get you through to completion, and it means that we'll get you in the house, which is obviously a really important thing. One of the key reasons to find a really good motivated broker is they are experts at finding maximum affordability, therefore maximum choice in terms of mortgage products. And with maximum choice means that product rates effectively going to come down because you've got more to pick from. We have access to all of the products that are available to intermediaries, and we also, as a high volume, really experienced mortgage broker, we send a lot of business to lenders, and they effectively reward us by giving us access to exclusive products. So you can be confident that the products that we have available are going to be as cheap or cheaper than you'll find elsewhere. And of course, if you go to your own bank, the disadvantage with that is that they can only advise on their own products. So, and there are indeed some other brokers that are not completely whole of market. So it's really important when you're looking for a broker, ideally one that doesn't charge a fee, but also one that's whole of market. And certainly if you're looking at a new build property, it's really important to find a new build specialist because they have access to a much better service from the lenders, dedicated underwriting teams, and really have the experience to make sure that you get the best possible products available to you for buying the house that you want. So in summary, I would say that there's two key challenges that home buyers face right now, and those are their own circumstances being particularly complicated right now, just for reasons as a result of COVID, as a result of job changes, changes in income structures, self-employed to employed, for example, people doing multiple jobs. But also the second main challenge is the fact that affordability, what I mean by that is the amount that lenders are prepared to lend, has reduced and is expected to reduce a bit further due to the cost of living going up. And not so much mortgage rates. I know the mortgage rates gets the headlines, but actually it's the two other problems: complexity of circumstance, finding a lender that will accommodate those complexities, and affordability coming down. And so that's why it's really important to find a really good motivated broker who is prepared to do the hard work and find the lender that will accommodate those complexities and that will maximize affordability to give you maximum property choice, and also by increasing choice, lender choice means you have access to the best possible products. And more lenders that are available to you, ultimately you're going to get the lowest rates available on the market. So yeah, really important to find and use a motivated broker, like I said, preferably one that doesn't charge a fee and one that is whole of market. And if you are buying a new build property, use the recommended broker recommended by the developer. So if you'd like to speak to one of my team, I'd be happy to speak to you, talk you through any of the fees and costs associated with buying a property, whether it be stamp duty, legal costs, what size of deposit would be optimal, get an idea of payments, interest rates, anything like that. Please do speak to us. One of the sales consultants at any of the developments will be able to put you in touch with us, and we'll be looking forward to speaking to you.
Thank you for visiting us today, Ollie, and providing your professional opinion into the market and what's best for our customers at the moment. If you would like to find your new home, please visit our website where you can find all of our developments in the East Midlands area. From there, you'll be able to get in contact with one of our dedicated sales consultants who can help you on your journey to find your new home with us. Thank you for watching.